Everyone wants to earn Bitcoin denominated income, but many investors are going about it the wrong way. In this video, I'm going to expose MSTY, the MicroStrategy Option Income ETF, and I'm going to look at the data and show you how holding this asset could leave you sidelined for Bitcoin's biggest bull market ever. And if you stay tuned to the end of the video, I will show you how you can earn true Bitcoin denominated income while also participating in the upside of this bull market, which could send Bitcoin to $500,000. Before we continue, make sure to smash the like button and share this video with a friend. Okay, so to understand this, you need to understand how MSTY actually pays its dividend. It does so by selling the upside on strategy and inherently selling the upside on Bitcoin. With a traditional company, let's take Coca-Cola for example. They bring in shareholder capital and they use it on marketing, product creation, R&D, distribution, and they sell that product and they generate a profit and they return some of those profits back to shareholders in the form of dividends. Now, MSTY operates entirely differently. They don't necessarily sell a good or service to the market. What they do is they generate options premiums by selling calls against strategy. More simply, they are selling away the volatility and selling away the upside. As you can see here, this chart shows the performance of MSTY since its inception back in February of 2024. MSTY is here in the green and red candles, Bitcoin in the orange and white, and strategy in the blue and pink. During bull markets, MSTY goes up, but not nearly as much as MSTR itself or even Bitcoin. Take this run from September of 2024 to November of 2024, for example. Strategy went parabolic, but MSTY hardly kept up. And since its inception, the actual ticker is relatively flat at 0%, while Bitcoin is up 100% and strategy is up 452%. And we're going to take a look deeper, including the income and the dividends. But for now, understand you are selling the upside. We can take a deeper look at the holdings of the fund. And I got this directly from the YieldMax website. If you go to this page and you scroll down, you can see all of their holdings. And I downloaded it. And I downloaded it, and we're looking at it here in this Google Sheets. Now, 100% of their holdings effectively are in cash, nearly 100%. And when you look here, it says negative shares of MSTR. And so these are the options that the fund sold. And so they sell these options, they get premiums, and then they put it into T-bills, into treasuries, and they hold cash. Now, they are short thousands of shares. Let's look at this option, for example. It expires June 13th at a strike price of 405. And so if we look at the MicroStrategy share price, this option is out of the money. It's got a strike price of 405 and MSTR is currently trading for 391. Now, chances are between now and June 13th, this strike price will expire out of the money. And so that will have been a good call option to sell. They generate the premiums and then they don't actually have to sell the stock because no investor holding that is going to cash it in, right? It's out of the money. But let's look at another one, for example. This is a strike price of 385. Well, now that call option is in the money. So the buyers of that option can purchase strategy stock from MSTY at $385 per share. So if you are MSTY, if you are holding this, you lost the upside from 385 per share to 393 per share. Now that's not too terrible, but imagine how this works out during massive bull markets. You could see here, last year, strategy went from $115 a share up to over $470 per share within a 2-month time frame. These parabolic moves, you are going to get decimated if you are holding MSTY. Now, MSTY is attempting to hedge some of this risk. They own nearly 80,000 contracts for in the money options at a strike price of 370 and nearly 35,000 contracts for out of the money options at a strike price of 390. But when you add up the balance here, they are short far more shares than they are long. And so when we get another Bitcoin bull market, which you have to imagine is coming very shortly, MicroStrategy is going to rip, and this fund is going to be on the sideline. It is not going to keep up. It doesn't matter that you're getting income or dividends from selling these options. You are foregoing upside during what could be Bitcoin's biggest bull market ever. And here's a simple chart showing the losses of this fund at certain strike price, at certain prices for strategy based on the current holding. So you can see the further up strategy goes, the worse. Now, how can you get real Bitcoin denominated income? Because I understand people want to generate income and cash flow, but you want to be able to maintain long exposure Bitcoin. So let's take a look first at MSTY. This is just a simple year-to-date analysis of if you deployed $100,000 into this fund. This column here shows you the price of MSTY. So if you bought it at the first trading day of the market, you were in at $27.16 per share. You acquired 3,682 shares. Sorry, my face is in the way. Let's move that. And then here is the share price over time. It's down to $22 per share. And here's the amount of dividends you received per share. So this column here shows you the actual amount of dividends. If you deployed 100K at the beginning of the year, so far year to date, you've earned $40,000 nearly in dividends. You've earned $39,876 worth of dividends, but your capital has drawn down from $100,000 to $81,000 for a net return of $121,580, a 21% return over the last 6 months since January. Now here, we're going to look at Bitcoin mining, because mining is another way to get income, but it's Bitcoin denominated. And if you stay tuned to the end of this video, I will show you why during a bull market, you would much rather be mining Bitcoin than owning something like MSTY. So here's another theoretical deployment of $100,000. The most efficient miner you could have bought at the beginning of this year was something called the Antminer S21 XP. These miners were selling for around $8,900. So you would have gotten about 11.2 miners in this theoretical deployment. Now, here in this column, we're looking at the monthly revenue earned by this fleet of miners. So if you were mining with a service provider like Blockware, you buy the miners, they plug them in at your site. You're not deploying additional capital into infrastructure and energy production assets. You're simply buying the miners with all of your capital, and you're able to run these machines at their site with a low cost power rate. And so this column shows you the monthly revenue in dollar terms. In this column shows you the monthly electricity cost of running the miners. And so this column is your net monthly profit in dollar terms. And here, this is the Bitcoin price, and this is your net monthly profit in Bitcoin terms. So if you took your entire monthly profit, revenue minus electricity consumption, and you kept it all in Bitcoin, you've mined about 0.1375 Bitcoin over the year to date. So from January to today, June 9th, 2025. That's your income. That's your cash flow. You could look at this column as kind of your monthly cash flow, dollar denominated, and you could look at this column as kind of your monthly cash flow, Bitcoin denominated. Now, an interesting point to note is over the past month, from April to May, your Bitcoin denominated cash flow increased. Now, why is that the case? It is because the Bitcoin price increased. So, this monthly cost of roughly $2,300 to run the miners, $2,300 in electricity, you had to sell less of the Bitcoin you mined to cover that cost. And so, your net profit is higher. And so, if you want something where you're generating cash flow and it's Bitcoin denominated, mining is a no-brainer. Now, the salvage value of the miner has actually retained so far over the last 6 months. Miners, they can fluctuate in value with the Bitcoin price over long periods of time as new machines come out. There's gradual decay on the cost of miners, but when you purchase the latest and greatest machine, especially given the diminishing marginal increases in miner efficiency, these miners are going to maintain resale value far into the future. Contrast that with MSTY, which is down 32% year over year. These Bitcoin miners, they're not losing all of their capital in nearly as quick of a time period as MSTY. And so net year to date, your dividends are less so far than MSTY, but 2 points to note. One is the aforementioned point about your capital has not lost any of its value relative to MSTY. But the second is that your income is Bitcoin denominated. So you have mined 0.1375 Bitcoin. So as the Bitcoin price increases, this dividend payout will increase as well, as long as you are holding and retaining your profits in terms of Bitcoin. And moreover, the net return so far month to date in June is only month to date. So it's only been 9 days this month. When you extrapolate out, assuming that the Bitcoin price maintains its current level, you can expect another $2,700 in mining profits for the month of June. But Bitcoin is on the rise, so that could actually end up being higher. Now, let's dive into this a little further, because what is the trade-off with mining? Where is your upside? Because we know with MSTY, you're selling that upside away. Well, with mining, your upside is when the Bitcoin price outpaces mining difficulty or the network hash rate. So in this chart, we can see the Bitcoin price here in black, and you can see the hash rate of the network in orange. Now, the Bitcoin price, as we all know, can increase very quickly in very, very short order amount of time. This chart here is in log scale. So these jumps between lines are significant moves for the Bitcoin price. You can see here, we went from 60K to 90K within a month. That's a 50% increase. It's physically impossible at this point in Bitcoin's history to increase mining difficulty by 50%. We're talking about building sites, R&Ding new machine technology, producing energy, building the infrastructure for these mining facilities with the energy production, the cooling technology, all of this, getting land purchases, power contracts, all of this stuff. These are months long processes. And so you can see here these green area. This is the 30-day percent change in the Bitcoin price versus the orange is the 30-day percent change in hash rate. And you can see these moments where the Bitcoin price is drastically outpacing growth in hash rate in difficulty. And what that results in is miners making more profits. All right, let's look at this chart, for example. In the black line, you have the Bitcoin price. And then in these multicolored lines, we're looking at the cost of production for various miners. So the purple is the S21 XP, the same one we were looking at before. The blue is the S21 Plus. The green is the S21, and the red is the S19 XP, a slightly older model. What you can see is when the Bitcoin price goes up, your profit margins, which is the delta between these lines and the Bitcoin price, they expand. You have that Bitcoin upside. Again, what we're looking at here shows the upside of mining. So the Bitcoin price is here in black, and then hash price, which is miner revenue per terahash per day, that's in green. So effectively, this is kind of the all-encompassing metric of miner revenue based on the Bitcoin price, transaction fees, and mining difficulty and halvings. And you can see when the Bitcoin price goes up, miner revenue goes up. You maintain that upside into Bitcoin price action. And here is another little table where we're going to look at the returns of mining over different scenarios. So we're looking at an S21 XP. This first column shows you the current breakdown of an S21 XP. So the current Bitcoin price, the current hash rate, how much does that theoretical $100,000 deployment into miners get you every month? You're looking at a monthly profit around $2,700. Your cost of production is around 50K. So that's an operating margin of over 100%. And let's say Bitcoin goes to 150K. So we're looking at this third column here. Assuming that mining difficulty increases at its relatively historic rate, Bitcoin mining profitability is going to continue to increase. It's going to outpace mining difficulty. And so your monthly profits will go from $2,700 a month to $3,600 a month. So imagine holding an asset that is correlated to Bitcoin and your cash flows are correlated to Bitcoin. And you don't have to imagine this theoretically, because this is possible with the Blockware marketplace. So you can go on to our marketplace, purchase any miner today, and start mining immediately. You can look at its historic hash rate, uptime. You can see how much power this machine is consuming. You can see the exact date it was plugged in. This is a platform built by Bitcoiners for Bitcoiners. So a core ethos in the Bitcoin world is don't trust, verify. And it can be nerve-wracking to trust a hosted mining provider. And so at Blockware, we do everything we can to be as transparent as possible. You can even see the serial number of this machine. So before you make a purchase, you can check the serial number with the manufacturer and see how much longer this machine has under warranty. You can even calculate your profits, your future profits with the calculator here based on what you think the Bitcoin price and mining difficulty will do. So when you consider getting Bitcoin denominated income, you're going to be better off holding an asset, holding something that is exposed to Bitcoin's upside, rather than holding something like MSTY where you're selling away that upside potential. Because we all know this massive Bitcoin bull market is coming. Corporations are buying Bitcoin in 1,000 Bitcoin clips at a time. Institutions, countries, nation states, they all are pouring into Bitcoin. Global liquidity is on the rise. Money printers are going burr. Now is not the time to be selling away the upside. The last point I haven't really dove into here is the tax benefits of mining versus the tax liability of holding something like MSTY. That income, the dividends you receive from holding MSTY is taxed like income. So if you have a state income tax, federal income tax, you have to pay that on those returns unless you're doing it within a retirement account, at which point you're not really getting that income. You're not taking bearer custody of those dividends every single month. Versus with mining, you can write off the cost of the machines. So let's say you had, 100 grand of capital gains by the end of this year. You could purchase $100,000 of miners and write off. Right now, you can write off 40% of the cost of miners in a single tax year. But if Trump's big, beautiful tax bill passes, which is looking likely, that accelerated depreciation will go to 100%. So later this year, come April 2026, when you're filing taxes for 2025, you would theoretically be able to write off 100% of the capex deployed for miners. So if you bought 100 grand of miners, you could write off 100 grand of capital gains. But consult with your accountant and your tax lawyer before you make any decisions. And if you're interested in mining, make sure to click the link in the description. It'll take you to mining.blockwaresolutions.com/consult. Here, you can sign up for a free consultation with one of Blockware's mining professionals. To no cost, no pressure. We can evaluate your individual circumstances and determine if mining makes sense for your financial goals.